Hello, traders. FX Pip Collector here. Today is Wednesday, and it is March 5th, and this is my morning video where we like to cover the US dollar pairs, including gold, and we also like to take a look at a couple of the JPY pairs. If you haven't done so already, definitely do join my free Discord trading community, linked at the end of this video down here in the corner and in the description of the video. If you'd like to check out my website, it's fxpipcollector.com and you get access to all the benefits listed down here below and more. So anyways, big push on the US dollar. I think we could say now with confidence that we are not looking at a correction to the last wave. And in fact, this wave B really is over, and most likely for the next several months, the weekly time frame will continue to make lower lows, lower highs, probably heading down into this 100% Fibonacci extension of wave A projected out the top of wave B. So that's great news because now we pretty much know exactly what direction is going to be the primary direction on all the US dollar pairs. It definitely was a little bit of a tricky move because for a while there it looked like an ABC, but that was just a big old bull trap. I think that over the next several weeks and several months, we are going to see a nice big downtrend, probably heading down for quite some time. And if we believe that the dollar is going to be in a downtrend for the next several months, then we would have to believe that the euro, the pound, the Aussie, the Kiwi would be in an uptrend, probably the dollar CAD, the dollar Swiss in a downtrend. So for me, the dollar analysis is such an important analysis as always. But before we move on and start looking at the dollar pairs, first thing we definitely want to check the news calendar for the day. Today we got this ADP non-farm payroll. That is really not an important news at all. This is actually an estimate of what's going to happen on Friday, so definitely not an important news event. But then we got the service PMI and we got final PMI today, so that could possibly move the market a little bit. And we got some more Kiwi news this evening. We got the governor speaking tonight from the Bank of New Zealand, I guess. So possibly some pretty decent moves from the Kiwi pairs this evening, and maybe some pretty decent moves from the dollar pairs around this news right here. Seems like the market really is responding to anything that Trump says nowadays, so definitely make sure you keep an eye out for any Trump speeches or anything like that also. So let's take a look at the euro dollar. Euro dollar, big push up. Like I said, I think we can confirm that this is not a correction to the last wave down, but this is definitely that trend reversal we've been waiting for. If you go all the way up to like the monthly time frame, I've had this forecast for many months. You can look back 6 months on my videos, and I was saying that this is likely going to turn up and make a big old giant uptrend that would look something like that. I think that we have confirmed that turn. Now, that doesn't mean there's not going to be pullbacks. There's definitely going to be pullbacks along the way, but overall, these higher time frames, like the daily, monthly time frames, should continue to make higher highs, higher lows over the next several months, in my opinion. So that means that I am definitely looking for longs. Now, I definitely wouldn't be trying to go long now, and I have no idea whether it's going to start a correction now or whether it's going to keep on drifting up. It may keep on drifting up to the next fib level before it finds any resistance and makes a pullback, or it could start a pullback now. I don't really care when it starts a pullback. All I know is that when it does start a pullback, I will definitely be looking for one, two, three waves down for entries to go long. So the minute I start getting a pullback, I'm going to throw my Fibonacci retracement out there. I'm going to look for three waves down. I'm going to look for Fibonacci bounces, and I'm going to look for more long opportunities. Be very careful trying to go short, even if you are a scalper, because the trend is up, and we have most likely a very large turn to the upside. So moving on to the pound dollar, same type of thing. I think we can definitely confirm that this is not a correction to the last wave down, but instead we are able to confirm this monthly time frame turn. Like I was saying about the euro dollar, you can watch my videos from 6 months ago, and I've been saying that this was going to eventually turn up and make a big old giant wave C, which I think we can confirm is the case as of now, which is great news because I would expect that big turn up to probably last at least 6 months or so. So going back down to the daily time frame, definitely doesn't mean there's not going to be pullbacks. There's not going to be moves down. But what it means is that most likely the daily time frame will and the weekly time frame will make a series of high, low, high, low, high, low, high, low, most likely for at least the next several months. So that's great news because we pretty much have a primary direction for the next pretty much whole year, or at least a good part of the year. Now, like I said, that doesn't mean there's not going to be pullbacks going down to the 1 hour time frame. If you get a breaker structure to the downside, the first thing I would do is throw my Fibonacci retracement on there. I personally have no idea whether it's going to pull back now or whether it's going to just keep on drifting up. No idea. All I do know is that if it does pull back, I am going to be excited not to go short, but I'm going to be excited to look for longs at the end of three-way pullbacks. So if you do get a pullback starting, the first thing I would do is throw my Fibonacci retracement on the last series of higher highs, higher lows, and I would look for three waves down. I would look for A, B, C pullbacks to go long for the continuation of the uptrend. So now that, like I said, now that we got a confirmation on the US dollar, I think even though the Aussie and the Kiwi are very weak right now, they also should eventually find their strength. Because I think that the Kiwi and the Aussie are now going up to make a wave Y, which a wave Y should be three waves. So we're probably going to get something like that on the monthly time frame, which should last pretty much all year, in my opinion. But like I said, that doesn't mean there's not going to be some pullbacks along the way. There definitely will be. Now, this looks very impulsive down, so I wouldn't be surprised whatsoever if it does try to make another push down. Maybe while the dollar pairs, the other dollar pairs are making a crescent, this will actually finish off an ABC like this. So don't be surprised if it does push down one more time, making more of a proper three-way pattern before it does find its strength. I would imagine we're going to need some sort of an Aussie news event, something positive for the Aussie for this to really find its strength and really start its move up. So keep an eye on the news calendar for some Aussie news that might give the Aussie some nice strength and a nice push to the upside. But we got to be careful assuming that it's going to go down again because honestly, I mean, it could go up, it could bounce up, bounce up, bounce up, bounce, and just keep on going. So be careful assuming that it is possibly going to go down again. We definitely have a breaker structure on the 1 hour. I definitely would recommend going long. I definitely wouldn't be trying to go long now. I would only be looking to go long on pullback. So if you see a pullback, I would definitely, at that point, be excited not to go short, but to go long at the end of every single pullback I see. So moving on to the Kiwi dollar. The Kiwi dollar, exactly the same as the Aussie dollar. We're going to need to find some sort of a strength for the Kiwi in order for this to really take off. But it's pretty much the same thing as the Aussie dollar, just a little bit different. But I think it's either an A or a 1, B or 2, and now we're going up for a 3 or a C. We're probably going to end up making some sort of a three-way pattern because based on the Aussie, it probably is some sort of a WXY, like 1, 2, 3 up, 1, 2, 3 down, and then probably 1, 2, 3 up for like a triple three pattern. But potentially, we are going to be in an uptrend for months and months and months. Definitely doesn't mean there will not be some significant moves to the downside, but it just means that more than likely the daily, weekly time frame will make high, low, high, low, high, low series for the next several months. So anyways, moving on to the US dollar CAD. The US dollar CAD, I'm also very bearish on. I also think the US dollar CAD is potentially going to be starting a big downtrend. I think it potentially will go down, take out all these lows, and what I think is very clearly a wave C of wave Y. We got an A here. We got what I think is three waves up for a B, and I think this is impulsive down for a wave C to complete this W, X, three waves of Y pattern. I think that's an extremely clear pattern on the monthly time frame. So the question is now is this right here the end of a crescent? It looks very impulsive. Now sometimes the market does make impulsive pullbacks and then it just keeps on going down. So it definitely could go down. But I think kind of like what I was saying about the Aussie and the Kiwi is probably going to happen to this. Probably when the euro and the pound do start a pullback, this will also start a pullback and it'll make more of a proper A, B, C shape. Probably something like that. Maybe head back up to the 61 to the 78% before it does end up continuing back down. So keep an eye on it. It does look like it should make some more of a proper ABC look before it really does make the big turn. Going down to the 1 hour time frame, I like to zoom it out a little bit on the 1 hour just so that way we can see the higher time frame perspective a little bit because this move up right here definitely looks like a five-wave trend for sure. That's why I think it's a wave A. We got to push down, we got to break. So I think if anything, it's probably over the next maybe week or so, probably going to make an A, probably a B, probably a C, and this is probably going to be an A, B, C, a B. But sometimes what we think is a way B is actually not a way B. Sometimes what we think is a way B is actually the continuation of the downtrend. So I would recommend shorts. And while you're looking for shorts, if it just keeps on trending down, making new lows, that's great news. While you're looking for shorts, if it makes three waves down to a Fibonacci level and turns back up, then you'll know exactly what to do at that point. So moving on to the US dollar Swiss, back up on the higher time frames. US dollar Swiss, yeah, I mean, I think we can also confirm because of the dollar index that this has already found a top. I was definitely thinking that it was going to go up and grab these liquidity areas, but boy, it looks like it's already turning. And I think the US dollar has turned, so I would imagine that this also will, over the next several months, continue to make lower lows, lower highs. The Swiss pairs have been in a huge downtrend for pretty much ever. This right here is the yearly chart. And as you can see, since the 1950s, the US dollar Swiss has been in a downtrend. So it would take something pretty dramatic to change that. Honestly, probably what happened here is they probably made another ABC correction and it's probably going to go down to make new lows, taking out these previous lows, maybe even make a run for these lows. So probably back into the downtrend, I would say. So back on the daily time frame, I would imagine that this will continue to make lower lows, lower highs on the daily, weekly time frame. So what would I be doing? I definitely wouldn't be trying to go short now, especially with this little 345 shape that you see right here. Doesn't mean that it has to pull back just because you see a 345 shape, but it does mean that a pullback probably is likely. And if it does make a pullback, I'm going to be excited not to go long. I'm going to be excited because I know I can throw my fib on there and I can wait for a three-way pullback and I can wait for a sorting opportunity. This potentially is going to be an extremely profitable year if the US dollar does do what it looks like it's going to do. Definitely, definitely. So that's great news for us. Moving on to gold. Now, gold is a little tricky. It hasn't moved quite as much as some of the other pairs. To be honest with you, gold kind of looks like it might have actually made like an expanding ABC correction, and it might actually just be back into the uptrend. It might actually go up to that 261, $3,000 area that I was forecasting originally. So we'll see if that's what it is. I mean, it possibly has already made a one, already made a two, and maybe the three ends here. This is actually the beginning end of a wave four right there, and we potentially could be in the wave five right now, heading up to that $3,000 an ounce area. So I would overall be pretty bullish, but the fact that it did break down, we had to keep in mind that this move up could make a lower high and go down. It seems like it should make a bigger wave four because this wave two was much larger than what we currently have for a potential wave four. I think it would make more sense for it to look like this and then go up and look like that because a wave four and a wave two should be pretty similar in size. So what we need to do is we need to go down to the 1 hour time frame and we need to put our Fibonacci retracement on this big push down. If it goes up, bounces from fib, goes up, bounces from fib, does not break structure to the downside, then there's definitely not a short. Yesterday I was saying that this move down right here is almost definitely just a correction to this last wave up. Anybody that's been following along with my videos has probably been making some pretty good money because I would definitely expect this to at least go back up to the 78%. If it bounces from that 78%, goes down, breaks structure, then great. Switch it up. Go back to looking for shorts. Probably a wave B and probably going down for a wave C, like I showed on the daily time frame, making this an A and then down for a C. If you see this picture, definitely switch it up and start looking for shorts. If you don't see that picture that goes up, bounces, goes down, makes a higher low, goes up, bounce up, higher highs, higher lows, then there is no reason whatsoever to go short, even on the shorter time frames, in my opinion. So moving on to the yen pairs, the yen has definitely been affected quite a bit from the news from the dollar, or from the dollar movement that is. Dollar yen, I still think there's a very good chance the dollar yen is in a big old giant wave C, and they might potentially might just keep on going down over the next several weeks and months, ending up looking something like that. And we probably are going to have to make like a 1-2 if that really is the case. So maybe a bigger pullback will happen at some point, but unless we see a break of structure on the daily, which we definitely don't have yet, I think this right here would qualify as a new structure level. So potentially you could move your break of structure point down to here, which is great news because that will give you a much closer confirmation for the end of a trend. So if price does go up and break that level, then I would say that this downtrend is over. But because of my higher time frame analysis, I would actually assume that it's a wave one, and I would assume even if it does break up, it's just a wave two, and then later on it'll probably go down for wave three. But none of this even has to happen. It could make a lower high, lower high, lower high, just keep on going down. So the trend is your friend, and unless it breaks structure to the upside, anything you see to the upside is nothing more than a correction in a downtrend. So moving down to the 1 hour time frame, I got my Fibonacci retracement up. Last impulsive move down. This move up is very impulsive. Maybe it's a wave A. Maybe this is like a wave B. Maybe it turns back up for a wave C. If it turns up to a fib level, making three waves up and then turns back down, I would definitely take it as a short. On the other hand, If it goes up and eventually breaks this daily time frame structure, that would turn me into a buyer. But I would also keep in mind that it might just end up being a big wave too on the daily time frame, like I just showed. So pay attention to your fib levels, pay attention to your structure, look for three-way pullbacks, and you'll likely be trading in the right direction. Moving on to the euro yen. Now the euro yen is extremely strong, mostly because of the euro. The pound yen also is very strong. Now, if this goes up and breaks and holds above structure, then I would definitely turn into a buyer. And at that point, I would definitely be willing to say that this is going to go up and make a C of B. And this is actually three waves up for A, three waves down for B, and then five waves up for C, like a 335 regular flat. But unless it actually goes up and breaks structure, I'm still looking at anything I see as possibly just a correction in a downtrend. We still may end up being in a downtrend to the 100% Fibonacci extension. You can't say that a trend is over until the market proves that a trend is over, and there's no proof that the trend is over until we get a break of structure. So yes, it is a very strong move up, but mostly because of the euro strength and the pound strength. So going down to the 1 hour time frame, kind of the same thing applies. If it goes up and breaks structure, I'll be more than happy to be a longer term buyer. You could definitely be, trading to the long side a little bit, some of these moves up, but you have to keep in mind if it does break structure at a Fibonacci retracement level, then it may just keep on going down. This actually could be an A, this actually could be a B, and this could be a wave C. If it turns down, breaks structure at a fib level, definitely stop looking for longs and start looking for shorts. If it doesn't do that, but instead just goes up and up and up and breaks structure, that is the confirmation you need to tell you that it's going back up for a wave C of B, like I showed on the daily. Now, the same thing on the pound yen. The pound is actually quite strong lately, so I mean, I wouldn't be surprised if it really does go up. But as of right now, and because there's no break, I'm still looking at this as likely doing this. But I'll be more than happy to change my analysis if the market tells me so. I have no problem changing my analysis at any time because the market's the only one that really knows best. This could be one, two, three waves up. It could be one, two, three waves down. If this breaks and holds above structure, then I'm going to say that it's going to make five waves up, taking out these highs, and this will be a 335 pattern for like an ABC of B. I'll be more than happy to change my analysis, not even a care in the world. But unless it does that, I would be looking at this as a possible ABC. I would be looking at it as possibly going back up to these highs and then turning back down. There's a big difference between breaking and rejecting structure and breaking and holding above structure. We need to see a break and hold above structure to know that it's going back up. If we don't get that, then there's no proof that it's heading back up for sure. So going down to the 1 hour time frame, the fact that it made a higher low tells me that it could be a wave C. Like this could be the A, this could be the B down here. We could be in a wave C. Wave C's do sometimes make lower highs, so definitely pay attention to your fib levels. If it turns down, breaks structure, I would go short. But most wave C's do at least take out the higher wave A. So if it goes up, takes out the higher wave A, rejects structure, goes down, breaks, then that would also turn me back into a seller. Now, on the other hand, if it breaks structure with momentum and holds above structure and maybe even pulls back and keeps on going, that is what's going to turn me into a buyer longer term. If you're buying now, then you have to be buying on a short term basis because this is definitely likely to be a correction in a downtrend. So pay attention to your fib levels, pay attention to your higher time frame levels, especially your structure levels, and hopefully you'll be able to tell the difference between an ABC and then back down again, or a 1, 2, 3, 4, 5 to the upside for a wave C of wave B. So anyways, don't forget to join my free Discord trading community linked at the end of this video, and also thank you for watching and happy trading.